This call is being recorded.
All right, so welcome again, everybody. This is part of the Stock Cards Weekly Master the Basics of the Stock Market Research webinar. And I am your host, Hoda. I have a co-host that I will introduce to you shortly. And let me just go ahead and mute everybody so we can get started. And as I said, a couple of other people are joining. Welcome again. And I'm muting everybody. But as I said, after we go through a couple of these slides and set the tone for the day, feel free to jump in, type in questions in the chat box. And again, this is a very friendly webinar with us. So you can jump in, you can ask questions. Don't feel this is a big presentation because it's not. It's a couple of stock market investors chatting and talking about basic stuff, good stock market investment decisions. Okay, so if you are here, you are part of a movement. It's a movement that we call the rise of do-it-yourself investment decisions. And we're very excited because you're here, we're here, we're all part of this emerging new thing that is happening in the world of investing. And there's a couple of things going on that is allowing us to all becoming do-it-yourself investors. One is we all have access to tons of free information everywhere around us, like through online internet and through Facebook groups and all sort of stuff. So that's one. Second thing is we all seen apps like Robinhood app or Stash Invest, things like that. They are all allowing us to be able to make investment decisions and implement those decisions without any fee or low cost, at a very, very low cost. And there is this thing going on. I don't know about you, but a lot of our users are actually have been telling us, or we see it, we hear it everywhere around us, that there's a little trust, there's reduced amount of trust in banks and brokers. So put that all together, this new movement of do-it-yourself investment decisions are happening, and you're part of it. So congratulations, because you're taking charge of your money and you're part of this interesting movement that is happening around all of us because of the emergence of the technology and things we talked about just right now. And well, while there's this rise of do-it-yourself investment decisions has happened and it's still going on and growing, something's happening on the side, and that's investment decisions are not still better. So it's a tale of a father and son. On the top, father, older, he used to not to be confident about making investment decisions, and he made a lot of mistakes. And we all heard that average investors underperform the market and the professional investors and things like that. And the tail goes to the son, and the son's also, although he's part of this emerging rise of do-it-yourself investment decisions, but he is still not confident and he still makes mistakes. So although we have all these good things going on for all of us, but we still are making mistakes, bad investment mistakes. And that's really confusing, because why we're making these bad investment mistakes? What's going on despite everything that we have access to? So it's very easy. There are two enemies. There is too much information. And all of you know, if you're part of our Facebook group or if you're part of all the other Facebook groups that talk about stock market investing, you've seen that there's just too much information going around that is very hard to digest which one's good and which one's bad. And the second part is we're still all emotional beings, and we get very emotional about our investments. So despite that we're all part of this amazing rise of do-it-yourself investment decisions, but unfortunately there's these two enemies that are going against us. Too much information out there, and us getting too emotional about our decisions. So that's why this weekly webinar is happening. And by the way, that's why we've created a stock card. We created a stock card to create a tool for this new generation of do-it-yourself investors to be able to make investment decisions without mistake. And this webinar is a tool, or it's a experience, or it's a, gathering for all of us on this webinar to make mistake-free investment decisions together. So every week we get on this on Fridays at 11 a.m. Pacific time. We get together for a webinar, and we pick up a topic of the week that is interesting to that week or happened that week. And we go through this process of making mistake-free investment decision together, because it's totally possible. We just need to know how, right? And we just need to have the right tool. So one thing before I jump in, this is not an investment advice. And of course, if you're part of this new generation of do-it-yourself investors and you're making your own investment decisions, you are in charge of your own decisions and your own investments. So I want to make sure we're not investment advisors, to tell you we're not investment advisors, but we are do-it-yourself investors. So this is a bunch of investors discussing and chatting with a bunch of other investors. And so make sure to just be clear about that. What you hear, we have interest in it. We might have invested in the companies that we're going to talk about, or we may not have invested. Obviously, if you're part of the stock card community, you will know our official decisions. But just wanted to put out there, this is not an investment advice. Okay, so let's get to today's host. On the left, it's me, Hoda. I'm co-founder and CEO of StockCard. I've been a lifetime investor since I was a teenager, helping my dad managing our family's fund. And it was very, very fun on those days. I helped my dad make a lot of good investment decisions. We also made some bad investment decisions for those reasons that we talked about. But things have changed so much since then, right? When my dad and I were investing, we would get newspaper and we would read, tomorrow morning we would read the numbers and the prices from yesterday, and we would drive to the investor relation offices of the stocks and companies that we own to maybe collect our dividend or get new shares that were issued, things like that. So things have changed so far. So I had a lot of fun as a teenager investing with my dad, and then it continued until today when I started a stock card and co-founded the company. I'm also a blogger. I blog about stock market every day. I'm a podcast host. We talk about those things later on at the end of the show. And I share my own personal portfolio that is about 100 stocks in that portfolio with all the stock cards user openly and freely. And I'm very happy to host this webinar with you. My co-host is Shama. And Shama, do you want to have a chat and introduce yourself to the people on the podcast, on the webinar?
Yeah, sure. Hi, Hoda. Hi, everyone here on the webinar. I'm Shama. I work as a senior financial analyst at StockCard. I have also been a stock market enthusiast and have been investing for a while in the stock market. I have completed my MS Finance degree from University of Illinois and have completed the CFA Level 1. Recently, I published a portfolio on our StockCard portfolio store, which is called Emerging India, and that has stocks that give investors a chance to invest in this growing and vibrant Indian economy. So this is where you would find different companies you would like to have a look at and see if you want to expose your investments to Indian market.
Excellent. Thanks, Shama, for joining me on this webinar today. Okay, so should we begin into today's topic, in today's example of mistake-free investment decisions?
Yes.
Let's do it. Okay, so today we want to talk about Starbucks versus Luckin coffee. In Starbucks, I don't think it needs any introduction for anyone here. Most of us probably in the U.S. or even beyond U.S. have already at least experienced once Starbucks. I'm a big fan. I'm a part of their loyalty program. And everywhere in the world I travel, the first thing I do is just get my dose of a Starbucks latte, and that's kind of that I might be one of those ones that is helping the slot growing every year on Starbucks side. So that's the Starbucks. But this week, actually past Friday, today is Friday, so last Friday, a company by the name of Luckin Coffee, ticker LK, IPO'd in the United States. And this company, it's not in the United States. It's a very, very young company out of China that only was founded less than 2 years ago, 22 months ago. And this company is a provider of coffee in China. And it's been very, very interesting because people are getting nervous about Starbucks and Starbucks plan to grow in China because of this IPO and because of the creation, because of the emergence of this Luckin coffee out there. So that's why we chose this today. There's tons of news and article out there that Starbucks gonna go under and Starbucks gonna stop growing and Luckin coffee is gonna grow and conquer China. And then there's also the opposite side of it. There's tons of people that are saying this is just doesn't make sense. Luckin coffee is coming in China people who don't drink coffee, and Starbucks now was not even right to go there, and what is Luckin coffee is doing. So there's this battle of emotional argument that is going on if you were reading the financial news and financial article. So that's why we thought this would be a very great example of how you would go about making a mistake-free investment decision comparing something like Starbucks to Luckin coffee. Yeah, maybe at the end of this podcast, this webinar, we can have a conversation around with what each of us are going to do. Shama, anything you want to add about Luckin coffee or Starbucks either before jumping in? I mean, I know you're a big coffee drinker. Whenever we get together,
Yeah, that's
you
for sure.
definitely get your dose of Starbucks. But
yeah, I always choose almond milk latte, as you know.
Yeah.
And so I'm very interested in this topic because it's a very new market for China, and it is kind of as all the articles say that it's kind of introducing people to coffee. It's something very new. It's something that people would like to try, and they have recently come across Starbucks coffee, and now they're trying. And Luckin is trying to capture Starbucks market. So it's going to be an interesting fight for sure.
Yeah, exactly. It's a good battle. Okay, so I'm loading stock cards page, search page, and we're going to use the stock card for Starbucks and Luckin Coffee to get to know these companies a little bit better. But so which one you want to start? Shama, do you want to start with Starbucks or do you want to start with Luckin? I mean, which one do you prefer to get started?
So let's start with Starbucks. Let's see how that company is as of today.
Yeah.
And then we can compare it with Luckin.
Yeah. Okay. Let's do that. Okay. So Starbucks, as I said, I don't think needs any introduction for anyone. Hopefully on the podcast, I keep saying podcast because I'm used to running the Renegade Investor Podcast webinar. And this company, as you see, has had a great year. This is a chart from early, like past June all the way to today. Maybe it was less than 50, about 40, 48 something in the summer. And now the company is about $76 per share. I'm a stock owner of Starbucks, and I have been for a long time. And the company was kind of flat for a while, since 2000 and maybe 2015 to 2018. As you see, the company was like not doing really anything exciting, and people were a little bit worried about what's going on. But since then, the company just had a great run, and some of that great run is because of their growth in China. So obviously, the company is a strong global company, but when you look at the company's geographical growth rate, and when you look at what the company is doing globally, there is an excellent growth rate happening in China for Starbucks. I was reading and listening to the annual report by the company, and they said Starbucks opens a new Starbucks branch in China every 15 to 18 hours.
Wow, that's incredible.
That's incredible. And Shama, I read that the company's goal is to have 6,000 stores in China in the next couple of years, and they've already halfway through it. They have about 3,700 stores already open in China. And the growth in China is just helping Starbucks to grow grow its revenue.
Right.
And,
Yeah. That's an incredible pace.
no, I mean, you can't imagine a gigantic company like
Yeah.
Starbucks with market capitalization of 92 billion as of last market close. This is just growing. Now it's starting to grow much, much faster. 10% is when you look at sales growth on the stock card, 10%, more than 10% last fiscal year growth. Current fiscal year growth is expected to be more than 6%. It's all green. Sales growth is all green, and profitability is not that bad either. They're a profitable company. There's tons of good things about Starbucks going on, and that's why you see the stock price is going up just again. So this is really Starbucks in terms of being a good company. It's also beyond having a conversation about China, beyond their sales growth and their China experience or example that we just talked about. They have had some bad, not so good return. As we said, there was a period of 2-3 years that the stock was just sort of flat and underperforming the S&P 500 index. But overall, in the past 10 years, and in the past 5 years, and in the past 1 year, and even year to date, the company is just doing well. And some of that growth, at least the recent growth, is thanks to China and China's opportunity. Anything to add? Do you own some shares of Starbucks? Anything beyond like the stuff that I just explained are the reasons I own China's Starbucks?
Yeah. So I do have a couple of shares of Starbucks, and these are the main reasons why anyone should and actually do invest in Starbucks, because of its growth, and it has a pipeline or a vision in front of it and what it wants to do in like next 3-4 years. So, and every investor can see that growth happening. So that's one of the positive points of investing in Starbucks.
Yeah, absolutely. Yeah. And are you not worried about, so what is your take when we're talking about mistake-free investment decisions? Obviously, Stock Card provides all the information to investors and to you and I to make, to avoid getting bogged down with overwhelming volume of data and information that is out there about Starbucks. But are you not worried? What is your take, or are you not worried about, what people are saying about China? Obviously, there's like trade wars. There's a lot of concerns about whether even Starbucks is doing anything right by being in China, because China being a tea drinker country. So
right.
Are you not worried about that? And when we talk about emotional decision making, when you read headlines that says China, it's a tea drinking country, and using trade wars and things like that, what is, at least walk me through your own emotional reaction, those kind of news.
So, right. So we do come across these type of articles, and first thing that each investor thinks is this company going to really work in that market? But given the past performance by Starbucks, I feel it kind of has a model that actually works in a bit differently in each market. For example, Starbucks likes to introduce flavors or products that are actually working in that market. So I feel this kind of panic or emotional reaction to some news like this is it's kind of a temporary thing that happens. And even US China trade wars and different rules coming out, so those all affect temporarily, but given the strength of the company, it shouldn't matter. That shouldn't matter the performance of the company.
Yeah. No, I'm with you.
Yeah,
So let's review Luckin first, and then we'll
sure.
talk about this battle.
Yeah,
Actually, let's review Luckin second because we looked at Starbucks now,
yeah,
and
yeah.
we can talk about the battle between these two companies right after. So Luckin Coffee, as we said, they they IPO'd last week, and they are already a almost a $4 billion company. And
Right.
it's so new that information about this company honestly is not out there. So when you come to when I first look at Luckin Coffee's stock card, I saw all these question mark, and my immediate
Yeah,
reaction, as you know about all IPOs, is that I don't know why people are getting too excited about this company, because in the past, so look at the stock price, basically just started something a little bit more than 20, and it did have some good upward movements. But by the
yeah.
time by the time we got into a week right now, the stock is even now again back to lower than what it IPO'd.
Right.
Um, and some people are getting excited, some people are not getting excited, but the overwhelming thing I see online about Luckin Coffee is that, as we said, there's two things. One is they're going to kill the Starbucks, it's the Starbucks killer. And
Yeah,
two, they say that's just, coffee is not going to work in China. So I want to talk about the market of coffee in China. So market growth for coffee drinking and consumer coffee in China, it's expected to grow more than 11% per year between 2019 and 2023. I believe that's an amazing market growth. I mean, obviously China is everything growing, and we're talking about big numbers. But when you talk about consumer packaged goods, like food and coffee and things like that, 10% growth rate or 11% growth rate, you never find things like that in more in more developed countries like ours.
right.
So that by itself is really good. But I want to share something about customer spend on coffee per capita in China. And that's something that I really found interesting. From the research we did about China, and the stock card aggregated all that information, is that the growth of coffee drinking in China, it's amazingly fast. And the reason I was reading through this article, once I saw that's the source of, as you saw, I just clicked on it, source of that customer spend per capita news or information about China. I was reading through this article, and what they were saying is that in China, although of course the country is a tea drinking country, so people right now per year per capita, they don't drink that much coffee. They maybe drink less than 10 cup of coffee per year. So of course China is not really a big coffee drinker country, but Sama, compare that to something like UK, and people drink 250 cups of coffee in the UK per year per person. And in the United States, that number is up to 363 cups per year. And
Right.
so if if we believe that China starts drinking a little bit more coffee, they're not probably going to get from 6 or 7 cups of coffee per year to suddenly 360 cups a year per capita. But
Right.
imagine even if they double that number of cups of coffee that they're going to drink. Imagine if those people who are drinking coffee right now, even just the ones that are interested in drinking coffee right now, by having access to Luckin Coffee, having access to Starbucks, and getting exposed to these new coffee culture, I guess, and just double their number of days that they drink a cup of coffee, that market opportunity is going to grow 2x. And I think that's not very even, that's totally feasible for me. And I think it's
Yeah.
just very conservative. I think it's going to get bigger. It's
More
going to
than that. Yeah.
yeah, more than that. So that's why I think from what I read about the market of coffee in China, Luckin coffee is good news for Starbucks. Luckin coffee is creating a culture of coffee, and we'll talk about later a little bit why it's creating the culture of coffee and what is it that they're doing that is creating that culture of coffee. But when you look at this 11% and you see the number of per capita coffee in China is growing, for me, there is no doubt that the opportunity of coffee drinkers and companies who are focusing on coffee in China is just tremendous, right?
Yeah.
So that's that. And then I want to go back to the idea of making decisions based on data. As you remember, we said in order to avoid making bad mistakes, you need to cut through the too much information that is out there and then control over your emotions. When it talks about cut through the too much information, although there's so much noise about Luckin coffee out there and there's information that is coming through their S1 document and things like that, but in reality, we don't know much about this company yet. So if you look at their information about their leadership, this company has only been a company past in less than 3 years. And we don't know anything about their leadership team, right? They're all changed in reality. They all just became part of this company in the past 3 years. We don't know anything whether this is a good company treating the employees well or not. We don't know anything about CEO. We don't know anything about obviously the quality of leadership. In terms of the sales growth, we obviously information came through their S1 documentation, but we haven't seen 1 quarter of this company announcing anything from as a publicly traded company. We don't know tons of information about how their growth, how their revenue information is coming. They're obviously unprofitable. Earnings per share is negative. This is funny because I was listening to a podcast, Shama, by Mom you guys, and there was an analyst there talking about Luckin, and he was saying there's 2 models of starting a company. Some companies start small and try to become profitable, improve their model, and then they expand the second branch. But that's not Luckin Coffee's model by any means. They're basically, we want millions and billions of dollars, and we're going to go and conquer the world with open thousands of branches. And that means that they're not going to be profitable. Is there a path to profitability? We don't know because we don't have that information. We don't know whether this management can pull it off. We don't know whether they can use this money well. We don't know any of those things about the company. And as much as we as the same as financial media and everything excited about the company, there's really, as you see all these great question marks tells us there's so much unclarity about this company that if we want to be a mistake-free investment decision makers, in reality, if you look at Luckin, there is all these risks that come from lack of clarity. And then compare that, I'm going to go back to Starbucks. When it comes to Starbucks, there is just so much information and so much good track record and so much clarity about what this company is all about and what can they do and what can they pull off that I believe that emotional reactions that is happening in the market is just not justified. What is your take on battle of Starbucks versus Luckin?
Yeah, so as you said, I too am a fan of Motley Food podcast, and I just recently read about it too, that the company is basically focusing on scale right now. They are not concerned about profitability as of today, because they just want to increase a lot of stores and be visible to all the Chinese population. So that would actually create interest in people. And then because it's all grab and go model, so it's not like Starbucks where you just sit and relax and have coffee. So it's more about the fast moving world and you just get coffee and go on with your work. Mm-hmm. So I think that's the model that they're working on. But as we said, that this model to become profitable is going to, it would take many years for it to, actually scale to and be profitable.
Yeah, no, I agree with you. So I overall, I think as you saw if you want to make an informed decision based on information and avoid getting bogged down by this enemy of too much information. In reality, if you look at Luckin Luckin Coffee, we don't have enough information about them yet. There's nothing wrong about waiting a quarter, 2 quarters to see what this company is all doing. It's going to do, especially because this company haven't been even a company more than 3 years. So not only they're just two of an IPO, but they also have been only around for 22 months or something like that. So we don't know anything about them. So although there's so much noise and articles and we read all these things online, I think if you really peel the onion to the core of information available about the company, we don't know much about that. Versus in Starbucks, we know so much about their good track record. And then when it talks about whether Luckin being coffee Starbucks killer, I think that's just absurd because Luckin is all going to be good news for Starbucks because what they do is they're spending all these money that they raised through their IPO. They raised about 500 or a little more than 500 million through their IPO, and they're very well backed up by venture capitalists as well.
That's true.
What they do is, Shama, I've heard that they provide, obviously their model is that you could order coffee on your phone and they deliver the coffee to you. As you said, it's not about sitting in the, and you're having this beautiful vibe and everything that Starbucks aspire to. Yeah. But Luckin Coffee, they provide your first coffee for free.
Right.
And they don't charge you any delivery fee, anything like that. So, this is all they do is that they expose more of people in China to experiencing coffee and drinking coffee, and then that's the only good news for Starbucks because you will experience this a little bit of a cheaper, lower quality. And by the way, Luckin Coffee, the reason I'm saying a little bit cheaper and lower quality is because they're all machine made, right? They're like one of these like the machines or robotics that you press, beep, 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 the thing. Yeah. And then coffee spits out. It's not like the Starbucks experience by any means. So when more people get exposed through free change of culture of coffee that is done by Luckin, then a bunch of them will say, okay, now I experience this one. Let me just, let me just get myself a little bit, I guess reward myself a little bit today and then go and see what is this delicious Starbucks, whatever macchiato mix or latte mix or whatever spice and matcha or whatever they're adding to it and just see what it is. And then a bunch of those people will get hooked to Starbucks and obviously a bunch of people will get hooked to Luckin Coffee. And if the market is so big that maybe there is chance to for both of them to stay there and grow together. But I think my money as of now goes to Starbucks.
Right.
And that's my decision. I'm not.
And another thing, Huda, is that if this market is working and if companies know this market is working, especially the delivery model, if Luckin is delivering coffee and Starbucks has also started a delivery service through Alibaba's application. And even McDonald's is starting delivery through McCafe. So kind of this market can get saturated too. And then the giants might survive more than Luckin Coffee. So that's one of the fears or concerns for Luckin.
Yeah. No, that's a good point. I mean, they say our model is doing delivery and being fast and providing coffee to you, but you're right. Starbucks is doing that partnership with Alibaba and McDonald's also doing that. So yeah, we didn't talk about McDonald's here. Obviously our users can go to Stockcard's page and search for McDonald's and see what that McDonald, what that company is all about, and read about their China experience and things like that. But yeah, I love that. So where is I said I'm gonna invest in. My money goes for now to buy Starbucks more or double down on Starbucks. What is it that you're gonna do with your own investments if you're investing in coffee?
Yeah, I think I'll buy Starbucks too because of the reasons that we talk about. It's a very good company and growing fast and has a vision. So I'm all in for Starbucks.
Ooh, Starbucks wins. Oh
Yeah.
my God. That's awesome. Okay. So that's pretty much it. That hopefully, that was a good example of a battle between two big companies in China's coffee market and a good example of how you go about making mistake-free investment decisions. Um, I want to actually unmute the rest of the call and see if anybody has any questions. If you are on the call and you have any questions, there's a chat button if you're on the phone on the bottom of your screen, and if you are on the desktop, it's on your right of the screen. Or you could just jump in and I'll mute you. So if you have any questions, let us know, or if you have any thoughts and ideas you want to add to this conversation, let us know before we wrap up the call. Any question, any thoughts and ideas from webinar participants? All right, I guess that.
Yeah.
All right, I'm going to go back, mute, and that's all good. So thank you, everybody, for joining us. The next live webinar we have, it's coming up on this coming, actually, this is not Monday, Wednesday, May 29th. So it's not Monday, Wednesday, May 29th at 3 p.m. Pacific time, 6 p.m. Eastern. And my co-host is going to be Mark Bernberg. And Mark, if you've been listening to our podcast, Mark's been on the podcast show for a couple of times. And he is the portfolio publisher behind our Green Fund portfolio. Mark is a technology entrepreneur. He's the founder of thegreenfund.com, and he's a good friend of mine who has accepted to join us as a portfolio publisher. That's the picture of the side here. And we're really, really looking forward to having Mark to join the webinar on Wednesday. And the conversation on that webinar is going to be all about, is it too late to invest in pot stocks? And if you're already an investor in pot stock, or is it what's happening right now? Is it going to go down because the market hasn't been very very generous, I guess, with pot stocks in the past couple of weeks. So that conversation, I'm super excited to answer everyone's question and have a good conversation with Mark on Wednesday, May 29th, this coming Wednesday. And a little bit about a stock card. If you are not a stock card, you just saw we use the stock card platform to make mistake-free investment decision and access to information without getting overwhelmed. So if you don't have an account, please sign up for free. There's a forever free account that you could continue to use doing your own mistake-free investment decisions on the stock card platform. We are on Facebook. We have a Facebook group, Intelligent Stock Market Investors, that you can join, and we talk mistake-free investment decisions every day. I host a podcast show, Renegade Investors. Check it out on I guess wherever you listen to your podcast. We write a blog, daily blog.stockcard.io. And our website, as I said, is stockcard.io. So hopefully you'll join us for the next webinar on Wednesday or next Friday, or join our Facebook group. I'm looking forward to having a chat with all of you guys and gals about stock market investing. And again, anything, Shama, you want to add? Say goodbye. Any last word before we wrap it up?
No, this was a really good and informative webinar for sure. We would be doing this every week, so it would be fun to analyze different news and different things happening around in the stock market. And this would be a good exercise too, in order to find good stock market investments for us too.
Excellent. Well, yeah. Excellent. Thanks, Shama. Thanks, everybody.
Thank you, Hoda. Thank you, everybody.
Thank you. See you soon.
Bye.
Bye.